Electric vehicle company Fisker is hitting pause on producing new cars for 6 weeks as it works to right its finances, which means that yet another EV company is struggling to stay on the road. Now, Fisker, if you didn't know, is the brainchild of Danish auto designer Henrik Fisker. After a prior start building luxury electric cars, Fisker, as we know it today, got started back in 2016. And it went public via a SPAC in 2020. Then the company launched its Fisker Ocean SUV and generated a little revenue back in 2022. But as the company sold more of its EVs, it also lost more money. In fact, its losses scaled to about $760 million last year. Now, scaling up auto production is notoriously hard and expensive. So that the company lost money while scaling just isn't a shock. But the amount of money that Fisker lost last year helped send its share price tumbling. Now, in late February, the company said that it would need more money in the next 12 months just to stay in business, and that brings us to the company's news this week: a production pause, continued work to land an agreement with an unnamed large automaker that could help the company get back on its feet, and of course, the hunt for more capital. Now, the company did announce a fundraise that may help, but the terms of that are very expensive. And I gotta say, the company's financial troubles may be in part downstream from issues with its cars, which TechCrunch reports have included issues like a loss of braking, key fobs that don't work, and hoods that fly up at high speeds. Fisker may survive, but it's hardly alone amongst EVs when it comes to struggling to make it. So that begs the question, what other EV makers are in trouble? The list is long, but I pulled a couple highlights for you. Arrival entered bankruptcy last month despite a prior $13 billion valuation. Canoo had to push its shares together so that it could stay listed on the NASDAQ, and Nikola, of course, has lost almost all of its value, and its founder was sentenced to 4 years in prison late last year. The list goes on. Lots of EV companies that promised big growth years ago are really having a hard go of it today, but perhaps in total we shouldn't be surprised. EV demand is softening, as TechCrunch has reported, though hype surrounding smaller EVs could indicate that demand is going to go up in the next 12 to 18 months. The question is that too late? So we're watching Fisker and a number of other former EV startups that are struggling to keep their head above water. The old venture saying that hardware is hard might need an EV variant. For example, hardware is hard, but rolling hardware is darn near impossible.